feels like all of this is going to play out faster than anybody imagines. Faster downside, faster upside, I think. But, I don't know, because Urian's right. If we end up in this situation where inflation doesn't come down, I actually think it goes negative. But if it doesn't come down, then we've got a longer term issue that could be more of a bone crunching bear market.
Hello and welcome to Wealthy Value. In today's video, Real Vision CEO, global macro investor, and cryptocurrency bull Raoul Pal updates about peak fear sentiment in Bitcoin markets right now, why he is more bullish on Ethereum over Bitcoin, and what will happen if inflation becomes negative. Make sure to stick around till the end of this video where Raoul Pal gives an insight into his crypto investment strategies along with a prediction for the chances of global recession hitting the economy. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. Let's dive right into the video.
Well, my first crypto winter was 2014. So I was in 13. I rode it all the way down 82% and all the way back up again into 2018. It feels much worse now because the number of participants in it is much broader. Everybody's angry. Everybody's fed up. Everybody's miserable losing money. But if you zoom out, ETH is back to where it was a year ago. So, but it feels a lot worse than it did then. It's weird. It just feels miserable. My view is the same. It's the long duration. It's the fear of inflation and liquidity being restricted. And if you think of it, crypto is a retail market predominantly, and you've just taken everybody's wages have gone up a bit, but prices went up more. So you've got negative real wages. So what that means is if you want to pay for your food and your gas bill, you don't dollar cost average into crypto. It's a pretty simple calculation and it worked pretty consistently. So we're seeing that it's a long duration asset and it's sold off. Now, the question is inflation beaten? i.e. is the rate of change going to come down? If it is, rates will come down, crypto will go up. And it's somewhere around this window, and I don't know where this window is. Could we have another puke? Pretty likely. The 60-month exponential moving average on Bitcoin is about 23,000, 22,500. Could we get there? Possibly. What does that mean for ETH? I don't know. Below 15,000? Possible. 1,500? Possible. But in the end, the macro is the driver of some of this. There's nothing else going on. There's no real negative news in the space. But what I'm also seeing is peak fear sentiment. I've never seen any like that. My core position is mainly ETH. I moved from Bitcoin to ETH, but either way, and I just had a basket equally weighted of other stuff to be involved. So it's a small weighting. I think it was like 15% of my overall position, equally weighted. And you use it as a VC model, which is, okay, we'll see. And then, okay, sure, if something big comes out of it and you can change your weightings over time because you have more confidence in that particular thing, it works. But, you would never bet 100% of your net worth on WeWork, and before you know it, something goes wrong. That we're probably going faster into recession than anybody expects and probably much deeper. I think that's coming. I think we've got a replay of 1974 underway, which was the ISM the Institute Supply Managers Survey, which is a good guide to the business cycle, went from 56 to 30 in 4 months. Similar setup with oil prices screaming higher, supply restrictions, rates going up, the Fed hiking, all of the same stuff. And there's several of these in history. Equities don't like it generally. The bond market tends to turn earlier, which I've been waiting for. And bonds have started rallying to say, you know what, things have gone too far. I still think we probably have another leg lower in equities. Into the final low, much like we had in 2018 as well. So I'm not short equities. I've been buying bonds and I've been buying kind of growth equities, all the stuff that's super beaten up, because I think that the cycle plays out faster than people imagine and the outcome is a U-turn by the Fed. This chart is rate of change of mortgage rates, 2-year rates, oil, gasoline, and the dollar.
Yeah, this is a good one.
Of the business cycle. It's suggesting we've just had the largest monetary tightening in history. Yeah. And that what they've done, the markets have done, because the Fed were barely involved. Yes, you're right, they're jawboned. But what they've done is cemented in the KK precipitous drop. As I said, that the last time we saw something like this was 1974. And it was over pretty quick. Now, it depends whether it's a quick thing or a longer thing. I think it's a quick thing. Listen, if you believe the future is in the technology, in blockchain technology, then this whole digital asset space should outperform the safe haven. That's just how things work. It always works that way. If you're in an exponential uptrend, because you're in a network adoption model for the entire space, not just for Bitcoin, then it should outperform over time. It's as simple as that. It's not a value statement about, I don't like Bitcoin because X and I prefer Ethereum for Y. It's all about network adoption model. It was like the killer chart of the entire event. Everyone stopped in their tracks. I mean, I've got a lot of charts that look like this, but this made total sense because I've been saying that the increasing fixed costs, commodity prices, PPI, all of that stuff was going to destroy consumption, demand destruction. The dollar was always a problem because it went up quite fast at a rapid rate of change. And rates have gone up, 2-year rates and 1-year rates have gone up at the fastest rate of change in all of history. 1-year rates in the US have gone up 800%. People say, well, that doesn't matter because the rates are low. I was speaking to a good friend of mine last night, big family office, multi-billion-dollar family office. And he's like, oh yeah, we refinanced everything. And I'm seeing it with all my friends. Everybody who's refinanced their stuff is now seeing massive interest payment increases. That's the rise in the oil price, which is a tightening of conditions, the rise in gasoline, the rise in mortgage rates, the rise of 2-year yields, and the rise in the dollar. Now, the S&P 500 right now is pricing in an ISM of around 47, around recession level. It kind of suggests that it might need to come a bit lower, but it's against a good comp from next year, so it'll come lower anyway. So the year-on-year rate of change versus the ISM. So I don't know when this turns up, but as yields are turning now, oil, I think, breaks as it did every time we've had this setup. Oil breaks as well, then we're going to find that this chart will start hooking up and we can start looking forward. Simply, the year-on-year comparisons of these commodity prices are a really hard comp, right? So oil at 100, wherever it peaked out at $120, right? Anything that's not above $120 is going to give you negative year-on-year rate of change of oil in a year's time. And that happens on everything from food prices, which are still going up, to pretty much every single commodity. So you're going to get some really astonishing comps. Now, it's not real inflation. It's not like the price of goods is coming down. It's not deflation, but it's a very different setup than the market currently accepts. And the last time we saw something very similar, again, sorry to bore people with history, was 1947 to 1949. Supply issues. Everybody comes back into the workforce and back into normal life, right? Prices explode, obviously. Demand, restricted supply.
Yeah.
So we got 13% inflation. What happened a year and a half later? Negative inflation.
So what are your thoughts about peak fear sentiment dominating the cryptocurrency markets right now? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.